Hey guys, welcome to another episode of Thinking Like a Bank, where we show you how to think like a bank using the same strategies and principles that banks use to help you find more financial freedom in your life. I'm your host, Sarah Ibrahim. So for today's episode, I have with us a very special guest. His name is Whitney Sewell. He is the founder of Life Bridge Capital. Whitney began his real estate investing career in 2009. Whitney's passion is working with investors, helping them secure financial security through the exceptional opportunities that multifamily syndication offers. Since founding LifeBridge in 2017, he has secured 900 doors and $125 million in assets under management. Whitney is also the host of the show, the Real Estate Syndication Show, a daily podcast where he has now interviewed over 850 experts, providing cutting-edge tools and strategies of the syndication business. Whitney and his wife, Chelsea, are on a mission to help other families through the process of adoption. They have personally endured the financial burdens that the process puts on families and have committed 50% of their profits to this goal. Whitney and Chelsea have 3 children by adoption. Whitney, I'm so happy you're with us today. Welcome to the show.
Yeah, pleasure to be here.
Thank you. Thank you. I really want to, I'm super excited to kind of jump into real estate syndication, being a passive investor, that whole world, but I really want to know more about your background and how you got into real estate.
Yeah, so I'll give you the satellite image view. You ask any questions you want, happy to dive in. I ultimately joined the military in March of 2001. And if you remember 2001, that was 6 months before our nation was attacked, and at that point, never imagined going to war, right? But joined in March. And then obviously, a few years later, found myself spending a year in Iraq and came home. Thankfully, or unfortunately, not everyone in my squad made it home. But I'm thankful to be blessed to be one that did make it home and safe. But learned a lot in the military, and one thing I think I was taught is just to have that never give up mentality. And that's helped me a lot. Being an entrepreneur, becoming an entrepreneur, it's not always easy, right? You got to be willing to get knocked down, not just once or twice, but many times, and be willing to get back up. To have a successful business, I think, in almost any industry. But came home, and then I didn't know what I was going to do as a career, and became a police officer. I started working for Kentucky State Police. I loved working the road as an officer. However, after getting married, about a year after becoming a police officer, I realized that it was going to be very difficult to have a family, on the police officer salary. And we wanted my wife and I wanted her to be able to stay at home. We had children. And so that was going to be very difficult. I'm about $30,000 a year. And so that pushed me, though. This was probably beginning of 2009. And this pushed me to looking for some way to supplement my income. I wasn't raised around entrepreneurs or real estate investors, really anyone that had a mindset of an investor. And so, but at that point, I started seeing people also retire from the policing industry that were making like $40,000 a year, and they've been working 25 and 30 years. And the writing was on the wall. It's like, wait a minute, this is obviously not what's best long-term. And so that pushed me into real estate even more. But at that time, 2009, I bought 2 triplexes, and I was thinking multifamily because I wanted to scale. I wanted to, instead of a bunch of single family homes, that was just my thought, right? If I can buy 2 doors instead of 1, well, why not, or 3 doors? And so the first property was actually 2 triplexes, and we made a ton of mistakes. Honestly, I mean, we just a ton of due diligence mistakes and trusted the seller and the realtor too much, all those things, very elementary stuff. But thankfully, we didn't quit, right? And so we kept going, but I soon became a federal agent, which moved us to Virginia, where we still live now. And I was a federal agent for 9.5 years or so, but at the same time, still pursuing real estate. And got up to like a 15 unit before I learned that there's this other thing out there called syndication. I didn't know that this even existed at that time, and so I couldn't believe it. But that once I started learning about syndication business, it just made so much sense because I love the structure and the discipline, and being able to grow a professional brand and business, and really working with professionals, building a professional team, even working with professional investors, all those things, as opposed to looking for more tenants and toilets, on a one-off basis, or another duplex or another single family or that type method. And so that once I learned that, we sold everything related to, the other real estate, everything. We even sold our farm. We had a farm at that time, had another business, and we sold everything and committed to the commercial real estate business. And so that was when we really took the plunge and committed to commercial real estate. And then obviously we started the daily podcast and have done numerous deals and projects now and have close to 150 million under management. And we've grown a lot. Our team has grown a lot over the last couple of years. But the Lord's really blessed our business.
Wow, thank you. It's a really nice story, and I appreciate you sharing all of that. Now, I want to go back to your experience in the military and law enforcement. Do you see that has helped you in what you do today? Like, are there any connections to that from your previous background to what you do today?
I think there's a lot of connections. I think military teaches you or trains you in a lot of ways, but I think, one way, like I talked about, just having that never give up mentality. I mean, it's not an option to give up when you're in combat, right? And people are depending on you, to perform. I mean, lives are on the line. They really are depending on you. And so, I guess it puts things in perspective as well, like things that you experience in business, just aren't as bad as being in combat. They're just not, and through those things. I think the interviewing skills, people skills, especially as a police officer, it wouldn't be uncommon for me to do 30, interviews on the side of the busy highway or interstate every day, it just at random people constantly. And so I think there's a lot of skills there that are transferable. But also I think just the mindset and working with people and serving is a lot of transferable skills.
Yeah, definitely. I did learn that I think the most important skill that police officers need to know is their communication skills. They need to be able to negotiate, deal with people. That's the most important skill that they need to have.
One way that that police officers communicate, and I think entrepreneurs communicate as well. And you don't think about this as much. You're trained this as a police officer, and I've seen it happen personally many times. I'm not that big of a man, right? I mean, I'm not 6'8" and 300 pounds. That's a lot different. That somebody like that approaching you is one thing, but somebody my size approaching you is different. However, what I learned though is the way your uniform looks makes a big difference. It can save your life. And so I was always very detailed about the creases on my uniform, it being creased and ironed and every button being polished, And so professional criminals, guess what? They know to look at those things. They know that you're squared away. They know if you know what you're doing or not. If you're slouchy, they see that. They know you're going to be an easy target. Well, guess what? Investors, whether they know it or not, they're assessing you when they look at you and they hear you speak, or they see your shirt or their, your suit or whatever. If you're slouchy, it's just kind of that first impression thing, right? They're making their mind up almost then whether they want to invest with you or not.
That's so true. Yeah, you're so right. It's the smallest things that tell a story, and they might not even do this on a conscious level. They might do this on a subconscious level where they're reading you without actually saying that in their heads, but they're remembering small details about you. Oh, he has a stain on his tie, or it's wrinkled, or he kind of uses this word the wrong way, or whatever the case might be. It just kind of sends a message to the person's head that this person might not be credible. They might not really understand how this really works. And I'm so happy you shared that. So how did you specifically, like, what made you get into syndication? Like, how did you learn about that in general? That's not really a common thing to do, right? To jump into syndication. What got you into that?
Yeah, it's becoming more common, I think. But at that time, I hired a mentor. Right then I started traveling like mad. And I mean, like twice a month, I would be going to a conference somewhere in the country. So flying all over the place, as hard as I could go, networking as hard as I could go, meeting as many people as possible. And what I started to realize was I started meeting many people that they had only been in this business a year or two, but they were already buying properties, 100 units, 200 units at a time. Oh, wait a minute. If they could do it, I can do it too. And that's one thing that happened in 2009 too, when I started learning about, not like one person or 10 people have built wealth in real estate. I mean, millions of people, have built wealth in real estate. And I thought, hey, if they can do it, I surely can do it too. And so the same thing happened. And I started traveling and meeting all these people and learning more about the syndication business and learning that, okay, if these people can do it, I can do it. I can figure this out. But I hired a mentor. And really, I've had many mentors in different aspects of the business or entrepreneurship. But that was a game changer as well. Somebody that gives you some confidence, somebody that can answer some questions for you. That's just helped me tremendously, especially early on.
Okay. Now, so how do you what's the process like of like, let's say, for example, I hear you on a show and I want to reach out to you. What does that look like? For example, the process look like? What are the steps in that happening?
For the investor, you mean, to work with us?
Yeah, exactly. Like, let's say, for example, I'm interested in investing with you. What are you looking for in a potential investor?
Yes. So our investors, they come from all over the place. Some are in other countries. Mostly they're in the U.S. Mostly are accredited. But we work with many non-accredited and sophisticated investors also. I would say majority of them though are very sophisticated. They are very knowledgeable about where they're placing their money and very picky about where they're placing their money. So, and I want them to be, right. One thing that happens is, they find me either through an interview like this or our own podcast or speaking at an event, whatever that may be. They come to our website, they sign up. Our team will call them and schedule a call with me. And one thing we the types of deals we do, I normally have to have what's called a pre-existing relationship with every investor. And so ultimately though, I need to have a phone call with them. And what that does is I document those calls in case I'm ever audited, right? And so I can show, hey, we had a pre-existing relationship. But what I am doing during that call is that I want to ensure that, hey, you're educated about investing. You understand that it's an investment, right? There's always risk, right? I want to make sure you understand that, the worst case scenario is you lose all your money here, right? It is an investment. That is a possibility. Obviously that's worst case. But that too, that I'm not taking, let's say, 50,000 is usually our minimum. I'm ensuring that I'm not taking your last $50,000, right? That's you're not the investor for us. If I'm taking your last $50,000, it's not a good place for you to be. And that's the last thing I want for you as our investor. So most investors though have invested in many projects, and they're very sophisticated about the types of deals that we're doing or about the, operations like we have. But once I have that phone call, then they're going to be on our investor list. And then when we have a project, they're going to see deals from us. They're going to see emails. They're going to get other messages from us about projects or opportunities to invest with us.
Okay. And, I think that's really important, right? That they need to have like other reserves in place because in general, being a limited partner is not a liquid investment, correct?
That is correct. I'm glad you said that because I try to make certain on that call that they know that this once you invest, this money's not available a month later, right? Or 6 months later. It could be a five-year hold.
And then you mentioned sophisticated. Is that pertaining to accredited investor? Is that the same thing as
So, I call an accredited investor a sophisticated investor to some extent, but that's as far as terminology that, let me break that down just a little bit. So there's a difference in, if we say you're an accredited investor or if you're a non-accredited investor, we now call those investors sophisticated investors. Okay. So if you're accredited, obviously, it's assumed that you're sophisticated, you understand investing, you built your wealth in some manner, right? And there's a couple ways, and that rule is in the process or has been being changed slightly. But ultimately, you have $1 million net worth, not counting your home. You have $200,000 of income over the last 2 years by yourself, or $300,000 jointly with a spouse over the last 2 years, and have the expectation that that's going to continue. That means you're an accredited investor if you meet any of those parameters. But if you don't meet those parameters, then you're sophisticated or non-accredited. And there's certain types of deals that you cannot invest in as a sophisticated investor, or it has to be a specific kind of offering for, a sophisticated or non-accredited to invest in. And that would be called what we call 506B offering, B as in boy. But that's what we've done up to this point is 506B. So we can allow up to 35 non-accredited per deal.
Okay. And then to be sophisticated, is that like, for example, if somebody is a certified financial planner, could that be considered a sophisticated investor?
It can really be it's a pretty loose term. They don't have to be a financial planner. They don't have to have any kind of degree in finances. But if to be a sophisticated investor, it just ultimately means you're non-accredited, but that you have some experience investing, that you understand the risk. And that's what I'm trying to verify on those phone calls as well. Like I said, I'm not taking your last $50,000. You do understand the risks involved, and hopefully you have some experience investing in real estate or in something, beforehand as well. So, you're sophisticated, you understand the risks, those types of things. It doesn't mean that you have any kind of specific degree, but I'm no attorney, by the way.
Okay. And what kind of this is now on the investment side where you're managing the investments, what kind of investments do you specialize in? What type of real estate do you mostly specialize in?
We've specialized in multifamily, and I'd say B minus to C plus type assets have been our core type properties, and so anywhere from 100 to 250 units at a time, mostly workforce housing, and so these projects are typically built in the mid to late 70s or early 80s, and there's an issue that we can solve, and usually that's performing better management or putting in updating the units. We may go in and put in $7,000 to $10,000 per unit on a property to bring it up to market, right? And then obviously raise the rents up to market. And so we can increase the value of the property very quickly that way. But multifamily properties have been our specialty, our focus from the beginning.
Okay. And then what about like geographically, where are these properties located?
They're in Colorado Springs, or actually we have about 750 units in Colorado Springs. We also have 172 units in Boise, Idaho, and that's actually a Class A project there.
Okay, nice. And now this might be a basic question, but like, let's say for example, just to make even numbers, let's say the property that you want to take over is $10 million and you have 100 investors. Would it be, and assuming each investor put in the same amount of money, would it be like a proportional share that each investor owns of that property? Like they would each own, I think, is it 10% each from doing the math right? Or would it be a proportional percentage of ownership for each owner?
Great question. And so ultimately, if we find a property, we put it under contract, we start doing due diligence. And once we're about 95% through due diligence, we're going to go out to investors, because at that point, we're nearly 100% confident we are moving forward on that project. Our team's been getting the marketing materials ready. We'll go out to investors, say, here's an opportunity. And then at that point, it's really first come, first served, or what we call first come, first funded. And so, investors sign up. We have a list, they fill out this form and they tell us how much they want to invest. Usually there's a 50,000 minimum. It's often that entity that owns the property would be split up, say $1 per share. Okay. And so, if somebody's purchasing, investing $50,000, they'll own 50,000 shares. And so, but there'll be people that invest 100,000 or 250,000 or 500,000 or $1 million, at a time. And so, it's first come, first funded. So if they say, hey, I'm going to invest $200,000, and they get their money in time, then that's what they own, ultimately. So we did 4 large projects last year. 3 of them were $10 to $12 million raises. One of them was around a $7.5 million raise, and they all filled up in about 10 or 12 hours. And so, wow. So if you're after that time period, then you'll be on a wait list. And so we'll just go right down that list. If there's a few investors that need to pull out, right down that wait list. So, there may be 150 to 200 investors in some of those projects that are that large. Okay.
And then how are the gains distributed? Is it when the property is sold, or is it, for example, if there's rental income on a monthly basis, there's like dividends that go to the investors on a monthly basis? How does it work? How does the return of the capital or the return of the money work as far as the investor standpoint?
Great question. And so every deal is going to be different. Every operator is going to be different. You want to know, right? When am I going to be paid? I was talking to an investor not too long ago, and he said he's invested in 6 deals this past year. And I said, wow, 6 deals, that, you're well on your way. And I said, well, how's the distributions going? How's some of that working for you? And he said, oh, I hadn't been paid for any of them yet. I said, you haven't? And I said, well, when do your distributions start? And he said, well, I don't know. And I said, you don't know. You need to ask. You should know. You've invested in 6 deals, and you don't know when the first distribution is supposed to, or at least planned for, right? And so, all of our deals up to this point are any type of value add deal. Ones like I was describing earlier. We're buying properties that are stabilized from day one. So they're cash flowing from the very beginning. And there's lots of room for us to increase the value, increase the income, those things. But they're cash flowing right then. So that allows us to pay investors within the first 30 days, typically after closing. So we close, investors receive a distribution, usually within the first 30 days, and then monthly thereafter, they'll get a distribution through ACH or check, whichever they prefer. And so, we love just that, systematizing that. Investors love getting that monthly distribution. Love doing that. And so that's, we love that frequency. But of course, there may be deals in the future where depending on if it's a development deal or whatever it may be, that, maybe there's a year, in the beginning where there's no distributions, then all of a sudden they start, so you want to ask that though up front, or what happens if an investor, if a operator misses some distributions. That's happened, I know, with a lot of operators over this last year through the pandemic and whatnot. They've missed it. They paused distributions just with not knowing what cash flow was going to be. But you need to know up front, because it can be different per deal, what happens with that money, right? You want to make sure it's accumulative, right? You want to make sure that when the deal closes or there's a refinance, something like that, that you're going to be reimbursed, those missed distributions.
So yeah, thank you for sharing that. Now I'm curious, or actually this is kind of an idea you just gave me right now. So a lot of our clients are, part of the Bank on Yourself or infinite banking community. They utilize cash value life insurance. And one idea I just thought about is that a lot of people have, cash in their whole life policies that they could leverage. They could borrow against the cash value and then use that for whatever they want. They could even use that for passive deals as limited partners. And then the fact that in some situations they could potentially receive monthly distributions, they could use those monthly distributions to pay down the policy loan. So what happens now is they're double dipping. They have their whole life policy earning interest and dividends, and they're also participating in a deal with you, hopefully earning profits and dividends with you. And then now their money is growing for them in two different places. So that's just an idea I wanted to put out there. But now let's say, for example, somebody's, you're working with a client and they're kind of like, they don't really know what to expect with working with other syndicators. What are some things that people should consider, assuming they're not going to do business with you? What are some things that people should consider when getting into, when becoming passive investors?
Yes. So I get asked often, I mean, I've been, numerous investor calls every week. And often I get asked, well, what should I be concerned about? What should I be thinking about? Or what have I not asked you that I need to ask? And because one guy asked me the other day, he's like, how do I know you're not just going to run off with my money? Like he didn't know me from anybody. And I understand that, somebody had introduced him to me and he had never heard of me before. And so, it's a legitimate question, I guess, but I'm like, you need to do some more research, you make sure you're comfortable with us, before you invest, with us, you need to make sure you know me. But the first thing I tell people is that you want to get to know your operator and you need to know their character. You need to know where somebody came from. And that's often why I share about the military and law enforcement, federal agent. I received Soldier of the year I was in Iraq. I was one of 5 people selected for Kentucky State Police out of 1,200 applicants. Like all those things, even becoming a federal agent. I mean, it's a very difficult process. All those things were very difficult. And so I share that so people can see some background and how I became who I am, And I just say, as an investor, I'm investing this year with some other operators as well. And so many of them I know personally, but still, I want to know how they became who they are. I want to know what's going to happen when they're in a tough situation, right? Are they going to have the investors, best interest in mind at the time? Who are they? How did they become who they are? Because it's easy to shine when things are going great, right? And so, when there's a problem, are they going to be somebody that communicates that to investors? And so I want to know that, you want to ask for some referrals as well. But when you're talking to that operator, you want to know who they are, but there's so many questions you can ask about the deal and the market and all those things that you should ask. However, the operator is the main key to any deal, right? To any amazing return that you're going to get from some kind of real estate investment is that operator that you're investing with. So get to know their track record, get to know their team. I've had investors ask about, our team. Well, who's your team? How many people are on your team? What do they do? And I think that's a good question. It's helpful to know that they're not investing with just like a one-man show, right? It's hard. It'd be nearly impossible for me to do everything, right? I do all these things that we're doing, and I wouldn't want to because they would barely get done, right? If they got done. And so ask about their team even. I thought that was a great question, by an investor recently also. So get to know the investor, get to know their character, get to know how they became who they are, and learn about their track record in real estate, learn about their team, learn about their plans, or ask about a thing that's happened over the past year, how they handled COVID, how were they prepared for that? What happens in a downturn? How are they prepared for a downturn? To ask them specific things about their market, ask them specific things about this deal, their business plan. There's, it could go on and on, but the first thing's the character of the operator.
Okay. So can you give us an example of like, not too much in detail, you don't have to give too much detail, but something that you kind of had a challenge and then what did you do to overcome that challenge?
In commercial real estate or,
yeah, in commercial
or what?
Real estate. Yeah, in commercial real estate.
So, and I would ask you, like getting started, or like as an operator on a property, or what would
As an
help you the
operator
most?
on a property.
Okay. So I would say this past year, one challenge we had was occupancy at one property was less than we expected. And this is pretty minor, but this is, one thing we were concerned with a few months ago was one property specifically occupancy was down just too far. I would say low 90s. And so it's still stabilized. However, we expect it to be a lot better, right? 2 months later, it's back up to like 96, 97%. It's fine. But still, all of a sudden we were like, all hands on deck. What's going on here? And we were able to turn that around quickly, thankfully. But that was probably one of our challenges over the past year. We were very prepared for a pandemic. We didn't know a pandemic was coming, but there's things we put in place that we were not concerned about this. We've not missed any distributions. Hopefully the properties have gone very well.
Okay. Now I want to talk about your podcast, and just for the listeners to know, I was actually on your show. I think it was episode 534 last year in April. I was on your show, and by the way, I've done about 100 shows as a guest speaker, and your show was number 2. So you helped me kind of launch my guest appearances, and I appreciate that. I thank you for that.
Yeah, you're welcome.
You do a podcast every day, right?
We do.
Okay. Now tell me a little bit more about that. That must be, I do one every week, and it's almost like a full-time job. So tell me a little bit more. How do you do it one every day?
Well, it's quite intense, to say the least, especially when we first started. I was still working a full-time job when we first got the commercial real estate business going, and still a growing family. We moved twice in the process, doing a daily podcast. It was insane, to say the least. But I batch those shows, of course. It's not uncommon. When we first started, my team knew that I needed to record 12 to 15 shows in one day, 2 days a month, where I would just record as many shows as possible. And I called that my marathon day, because I would still be interviewed on 1 or 2 other shows. I would still have investor calls. It was just madness, to say the least, right? It was a real sacrifice for the whole family to make all of it happen. Now we have 4 full-time VAs in the Philippines that handle the entire podcast. I've never done anything but the interviews. So I had to build that team from the very beginning to do everything else, because I knew there was no way that I would have time to edit the audio or video or show notes and, do all this, even finding guests. It's not possible for me to do all that and do it well. And so I had to build a team. Even now, it's not uncommon for me to do 8 shows a day, 1 day a week, something like that. But all that's automated. As much as we possibly can. But I have a great team of virtual assistants 4 of them that work full time for me and are very focused on our podcast and just social media and those things.
And just to disclose that too, I also have a virtual assistant in the Philippines too. I'm a big advocate of doing that, and I think they do a wonderful job.
They do.
And on a side note, if you're an entrepreneur, check that out. Check out that avenue too. It can help you out a lot. Now, do you see? And I would assume that there's a positive correlation between the amount of guests you have on your show and episodes you're building with the amount of capital you're raising. Would you agree with that?
No doubt about it.
Okay, for sure.
Yeah. So everybody, I've been asked over the last 3 years, so many people will say, has it been worth it? Because they, like yourself, you know how much work it takes to do a weekly show. Mm-hmm. And before I started the podcast, I was talking to numerous people that were hosting shows, probably like you did. And I was asking, well, what all do I need to know? What do you do? Trying to start this podcast. And all of them talked about how much work it was. Right. Mm-hmm. But the one thing they all had in common is they were doing a weekly show. So that really made me question, should I really do a daily show? Is this just insanity for me to think that, we should do that many shows? But anyway, it was all about how fast you want to get there. My mentor at that time, I shared with him, and he's like, that's why you have to do it. Most others are not going to. I would say it has just pushed us forward that much faster. As much as anything, it pushed me to build a team, right? It pushed me to think differently. If I'd started a weekly show, I would have tried to done it all. And most likely it would have been done halfway. I would have gotten behind, frustrated, maybe even quit, Mm-hmm. But since building that team, it helped me to just put those systems in place from the very beginning. And to answer even your question a little further, no doubt it's pushed us to grow fast. Everybody talks about the value of your network. Well, I've interviewed almost 1,000 people, now just in a few years. So that's, our network has grown very fast.
Yeah, definitely. It's not only a good way to spread the message about your business, but also to build relationships with people too. It's like you're going to conferences and conventions, but on the fly, like on a daily basis, without having to actually fly anywhere. And you actually do build like sound relationships with people. When it comes to, if I ever need anything in passive real estate, I know to go to you. I was on your show, you were on my show. So it's a really nice way to build nice relationships with people.
Right.
Do you have who are some people that you look up to in either in the business industry or in business or in the real estate industry? Some like kind of famous people who you look up to and like some of your role models?
That's a good question. I would say on a business level, I do listen to or read a lot of Brian Tracy's stuff. I think it's very motivational. Most of it's like stuff that makes so much sense, right? It's sort of like stuff you should already know, but it's like, it's just good to hear it again.
Mm-hmm.
One thing I recently, went through a couple times is No Excuses, the power of self-discipline. I'm a big proponent of self-discipline. And I just think, when you can master some self-discipline, you can go so much further than you think,
Mm-hmm.
even if it's just a little thing like the bed in the morning, there's some things like that. And then also, a good friend of mine is Joe Fairless.
Mm-hmm.
I'll give him a plug as well. I mean, he's a good friend of mine, an early mentor of mine also. And we do lots of stuff together now. He has a great book also about the syndication business. But obviously that's kind of two extremes there, right?
Mm-hmm.
As far as Brian Tracy and Joe. But then, in the business, there may be some other people that are more, maybe not as famous, that not like a Brian Tracy, type figure that I definitely look up to. But those are two guys that I definitely look up to. Brian, I've never met. Joe, I know personally.
Okay, nice. Yeah, I'm just like, and speaking of books, what other books are you a big fan of, or you that you like to talk about?
I'll give you two quickly.
Okay.
So one recently is Who Not How,
Uh-huh.
and by Dan Sullivan. Very good book. If you're an early entrepreneur, even if you're not, it's a good read. Just really, I mean, the title kind of says it, right?
Yeah.
Don't waste your time on the discipline or on the task as much as finding the individual that's really good at that. And that's what I had to do in the very beginning. I talked about that with podcasts.
Mm-hmm.
Another book that I thought was really good is The Road Less Stupid. It's really good. I would encourage anyone to read it. Really, it's just really good. Avoiding the dumb mistakes that sabotage growth, profits, and business success. It's good.
I'm gonna actually check out that book, the second one. Yeah, for sure. The first book probably, I assume, helped you with podcasting, right? Where you thought like, instead of learning how to edit videos and edit recordings and publish them in show notes, you could just hire other people to do that for you. You can find the talent and then they could do that for you.
Well, I actually just read that book just like a month ago or 3 weeks ago. So I was, that's why I said, like, most entrepreneurs, if you scaled it all, you're already having to do that.
Mm-hmm.
But it's still a mindset challenge. Mm-hmm. Often, I think, for many entrepreneurs, it's like there's always these few things that you feel like you have to be the one doing,
mm-hmm.
right? And that is such a hindrance. That is such a roadblock for most business owners. Are these things that it's keeping you from doing those most important tasks, or more of those
mm-hmm.
most important or high dollar tasks, because these things over here that you just feel like you have to be the one doing. That book's going to help you to get past that, to a big degree. I already had, doing the daily podcast, I didn't have any choice but to hire out. I had to do that from the beginning, but yes, it will definitely help you with that.
Okay. Now I want to go back to syndication real quick before we wrap up. If somebody, for example, was interested in starting their own fund or their own syndication, is that something you can help them with?
Sure. We are taking a few clients as far as mentoring, but okay. We're very selective about that. Somebody can apply on the website, if they're looking to get into this business.
Okay. Sounds good. So then people could essentially reach out to you for a couple of reasons. One, to either be limited partners, or if in some situations, in a few situations, they could to as a mentee or to be mentored by you. Good.
That's right.
And how can listeners connect with you and follow you?
Yeah, they can go to lifebridgecapital.com. They can sign up there on the contact us page. You can email me, Whitney at lifebridgecapital.com. You can also call or text me at 540-585-4338.
Perfect. Okay. And I'll be sure to add all these in the show notes below. That way people could just click and visit you, and hopefully they do. Whitney, I really appreciate you on the show. I look forward to reconnecting with you, either being back on your show or you coming back on our show. Thank you so much for joining us.
Sounds great. My pleasure.
To learn more about what we do and how we can help you grow more wealth, please visit www.finassetprotection.com. That's FIN, assetprotection.com. The topics presented in this podcast are for general information only and not for the purposes of providing legal, accounting, or investment advice. On such matters, please consult a professional who knows your specific situation.